Broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, Ron here at Ablesys. Welcome to the webinar. We'll go over the charts and answer any of your questions. You got the question box in front of you there. And we'll take a look at the Able Trend signals. If you were using the signals today, for example, on intraday trading, we'll take a look at the E-mini NASDAQ. Well, how would you have done? You can compare it to your signals. If you don't have Able Trend, this is the beginner webinar open to the public, so we mostly newer people, and that's perfectly fine. And we'll take a look at it. The software works the same for all markets and all time frames. Doesn't matter if you do day trading, swing trading, position trading, whether you trade stocks, futures, Forex. It's exactly the same for everything. Just as accurate for one thing as it is for another. And the way you read the chart, which is what I'm going to show you because that's the most important thing, knowing how to use it and how to trade with it the proper way, where to buy, where to sell, where to put your stop loss, and when not to trade at all. The no trade zones. It's the same for everything. So the same signal, same color, same dots for every market, every time frame, every chart. So that makes it easy because once you know how to use it, which is real easy actually, it's just a couple simple rules is all we're using. It's really easy. We're just waiting for all the colors and the dots to match up. That's it. It's as simple as that. So let's jump in and take a look. I've got a daily, this is for stock trading. This is a Honeywell chart. This is a 2-hour daily combination. We always have 2 time frames combined into one chart. That's what makes it so special and why we get so many less losing trades, why it filters out a lot of false signals that everybody else is taking and we're not. That's the whole point of it. We got to be better than everyone else, otherwise it's not worth it, not worth having, obviously. But, 20 years later, it's working real well. So let me jump in and show you. I'm going to zip through this a little quick, but I'll keep it simple, and that's the most important thing. Buy signal is right there. You're looking for the first time you get a blue bar, a blue small dot, and a blue big dot. Some people use X's. Sometimes they put X's on the charts. Let me see what I did here. Okay, I did put X's there. I used dots there. Okay, so it's the same thing, a dot or an X. The point is you need to have 3 indicators agree before you make a trade. There's no exception to that rule. Either it does, all 3 agree, or we're not taking the trade, period. For example, this is a no trade zone. Red dots above, the red dots is the higher time frame dots, because remember, 2 time frames together, that block the prices from going higher. It's an invisible resistance point that a software's algorithm can see. You can see the price went right to the red dots and stopped. You put those red dots in there 4 days before that even happened. Pretty cool stuff. The blue dots block or stop the prices from going lower. The smaller blue dots is the lower time frame, in this case the 120-minute chart. The bigger dots is the daily. In this case it's the daily chart, the higher time frame. So the point is you get the blue bar. Here's the first time everything agrees. A blue bar, a blue small dot, and a blue big dot. They all agree. That's where we're going to get in at the finish or the close of that bar. Stop loss goes on the bottom of the blue bar, up and away we go until we get stopped out right there. Stop losses go on the second lower row or previous lower row of small blue dots. It was a nice little trade there. I picked up about 5 points and 4 points in 2 weeks. Excellent chart for swing trading. There's a perfect swing for option trading. There's your perfect, and this is just for stocks, not for futures, stocks only. 120-minute and daily combination. There's the perfect short trade or put trade if you trade options. And the stop loss, red bar, red small dot, red big dot. And the stop loss goes on the top of the red bar. Just like when we went long, it went on the bottom of the blue bar, down and away it went, huge downtrend, big winner. Let me zip to today because this is a little bit easy, obvious no trade zone there. Anytime you get red and blue together, it means stay away. The market's going to be sideways or choppy. Don't do anything. You're better off doing nothing. We don't want you to risk your money in a risky market. Able trend is only about low risk trades only. Low risk trades only. Really nice buy signal came in a week ago for anybody who has our software and was trading this. Stop loss goes on the bottom of the blue bar. Again, there's the first time you get the blue bar, the blue small dot, and the blue big dot right there. And we'd still be in the trade today. We got in at 143.5. You're at 148.5. Good, nice little trade there. 5 points in 1, 2, 3. Each one of these is a day. 1, 2, 3, 4, 5 trading days, 5 points. So looking real good there, especially if you got a call option on that one, and you're doing very well. I'm going to jump into a daily, weekly chart for swing trading. That was for more position trading. The other chart was more for swing trading. You can see this is IBM. You can see here, here's the three indicators agree. First time we got a red bar, small red dot, and a big red dot. Now the arrow is just a fourth indicator that we've added to the chart. It doesn't have to be in sync. It doesn't have to agree, but it's just a fourth indicator to just give you even more confirmation. A fourth indicator agreeing that that's going to be a good trade. Down and away it goes. First time we either get a stop out or a blue bar with a blue dot, because obviously blue means up and red means down. So they're opposites in Able trend. And that was a really nice trade right there. Here was another buy signal right there. Just recently, if anybody who had our software a month ago, you had the buy signal right there. Again, first time you get the combination of a blue bar, blue small dot, and blue big dot is right there. So we would have bought it at 120. We're still in the trade today at 135.5. That's a really good trade right there. Stop loss goes on the previous or second lower row of small blue dots below the price. So stop loss about 131.5. We got in at 120. The worst we can do is make $11 a share. At the moment, we're up $15 a share. So excellent trade right there. You just have to get in on the first combination of blue bar, blue small dot, blue big dot. Now, if you're doing day trading, we also add, and you can even use that, by the way, the three green bar exit. It's also valid for those other charts too. Usually the other charts are more longer term trades, but that's perfectly fine if you want to do that. But for sure, we would want to use that on a day trading chart. So let me jump into this chart right over here, and we're going to take a look at the day trading, because that's what everybody seems to want to do. And that's perfectly fine. If you can be in front of your computer and be serious about it and take every able trend trade, because how would you know which one to trade and which one not to trade? Well, you got to take them all. If we knew which one was going to be a better one than another, it wouldn't be on we wouldn't say to take that chart. But obviously, nobody could know that answer. David's saying, when are you using stop, top at bottom, or a bar? When it's David, when it's the first trade. As soon as you get into the trade, when it's the first, like here's the 9:30 New York Open. I'm on the East Coast outside of New York. So this is the 9:30 Open right here. The signal actually came in about 8:50. Blue bar, blue dot, blue X. The first time you get all three together, that's when we make the trade. But we don't generally talk about trading on pre-market, because it pretty much is usually a little flat and quiet at that time. And you certainly can if you like. We just want to trade when the volume comes in, when the new session starts, because sometimes it can be very different from the pre-market. So we play it safe and get in at 9:30 or later. When you have the combination of all three, like right here, David, you got a blue bar, a blue dot, and a blue X. This is a 1 minute, 3 minute mini NASDAQ chart, and it was an extremely profitable day today using Able trend signals. Really big time day. Actually, yesterday and today have been nothing short of fantastic using the signals. And we put the stop loss on the bottom of that first blue bar, because there's the combination of the first time at 9:30 when we get the blue bar, blue dot, blue X. Nothing else is good. It's that simple. You have to have blue bar, blue dot, blue X, or red bar, red dot, red X. Otherwise, it don't do anything. Nothing, gives no exceptions to that rule. Stop loss, I always just put it one tick, like a quarter of a point, under the bottom of that blue bar. There's your three green bars in a row. It usually means the trend is getting a little tired. And especially if you're the type that likes to get in and out more quickly, You could use the 3 green bar strategy, whichever comes first. 3 green bars, prices go under the blue dot and we get stopped out, or a red bar with a red dot, whichever comes first. In this case, got the 3 green bars there. First trade of the day, very, very nice. Picked up 25 points. That's not bad. I mean, that's like $450. That's $500. It's $20 a point. Yes, it's used for every time you get the first, when the 3 indicators agree, David. Not just at the open. Here's another example right here. That's 10:20 in the morning, and almost an hour after the market. It's the first time. Blue bar, blue small dot, blue X. Stop loss on the bottom of that blue bar. And we got stopped out on that one. We lost about 4 points, actually about 3. I always like to exaggerate the losses, not the gains like everybody else does, and try and fool people. So first trade of the day, we made 25 points, $500. Second trade of the day, loss $50. I mean, small loss right there. Now you say, okay, when do I get back in again? You get back in on a sweet spot. What's a sweet spot? A sweet spot is when the prices pull back down and touch the small blue dot. If it's 1 tick away, we're going to call that touches it. It's close enough. When the prices pull back down, hit support, bounces off of it, and goes back up again. When we get a blue bar, blue dot, blue X, remember, all 3 have to agree, we're going to get back into that trade. So we're right back in again here. There's your 3rd green bar, break-even trade. Okay. Right back in again here. There's another sweet spot. It hit the bottom of the blue bar, bounced off of it, went back up, out over there, and we gave back about 3 or 4 points. Okay? Simple stuff. We're just looking for all 3 things to agree. If it doesn't, we do nothing. That's it. We get out on 3 green bars, or a stop out, or an opposite colored bar. Those are the only rules. There's nothing else. Keep it real simple. Okay. Sweet spots is when the prices pull back down to the blue dot, and it goes from, and the price bounces off the blue dot, and the bar turns to blue. There's a short trade right here. First time you get a red bar, a red dot, and a red X. Okay, stop loss goes on the top of the red bar, and we're out over here. Here's your 3rd green bar. It's about a break-even trade. Michael S. The blue arrow, the April trend sig indicators. Yes, I use arrows for trend sig. It's just personal preference. And I think the X's work better than the big dots. I'll tell you why. It makes it a little easier to understand. Some people get a little confused about the dot in the middle of the bar. So we want 3 things to come in play. Red bar, blue dot, blue X. Here's red bar, red dot, red X. It's the first time they come together. And you have to wait for the close of that first red bar, because once it closes, it's final. It'll never change again. You're welcome, Michael. Here's your 3rd green bar, break-even trade. Now, on the sweet spots, this is important. Make sure, because a lot of people say, well, is this a sweet spot? No. The price never came down and tested support. It's got to bounce off of support. Again, if it's 1 tick away, I mean, we're gonna call that okay. See, right over here, that's a sweet spot. The sweet spot's actually here when the bar closed blue. Just put your stop loss on the bottom of the blue bar. Keep it simple. Let's keep it simple. And keep those, and the stop losses are nice and tight that way too. Okay? Because a lot of people, sometimes they get a little confused on the sweet spots. And again, I would too if I didn't, wasn't explained to me. I wouldn't know either. Obvious no trade zone right here. And it's a good thing we did. Look how choppy that was. Up, down, up, down. It was all over the place. That would drive you nuts. It would be a mess. There's a trade right there. Again, first time they all agree. Doesn't matter how far the prices are to the dots anymore, because we're putting the stop loss 1 tick above the red dot. So you got a red bar, red dot, red X. We lost on that trade. Got stopped out because the prices went above this top of this red bar. That was about 4 points on that one. It was actually 3, but let's call it 4. Okay, here's the sweet spot. Look, the price retraced and hit the red dot there, hit it there. Now we're just waiting for a red bar. There's that red bar. And the stop loss is just at the top of the red bar. It's only 3 points away, 2.5 points away. No, not a lot of money at risk. Red bar, red dot, red X. We're in at the close of that bar, really the open of the next bar is where we're going to get in. There's your third green in a row right there. So from here to here, we're in that trade. I picked up 6 points. You know what? That cleaned up those 2 small little losses we had before that we got stopped out on. Okay, so now, is this a sweet spot? Is this a sweet? No, the prices didn't pull back and touch the red dot or get within a tick of the red dot too. That's fine. We're not going to get like overly technical with magnifying glasses on the chart to make sure. Up there it is. Hit it right there. There's a sweet spot right there. Okay, stop loss on the sweet spots go at the top of the red bar. If you're within a couple of points, let's just keep it at the top of the red bar. When you're over here, like much further away, as it turns out, it wouldn't have mattered. Put your stop. If it's too far away, keep it simple. Put your stop loss on the top of that red bar. Either way, we're going to lose a little bit on this. No, actually, we broke even. There's your third green bar. We broke even on that trade. Okay, now you say, well, what about here? Is this a sweet spot? Yeah, it is. Think about it. The green bar, the price touched the red dot, bounced off of it. There's your red, went to a red bar, got the triple confirmation. Red bar, red dot, red X, we're good. Okay, stay in it. Let's say we're looking at this live. Stay in it. Because we're looking for 3 green bars, or if the prices go above the red dots, and we get stopped out, or if we get a blue bar, blue dot, whichever comes first. Okay, let's say we're looking at this live. Okay, one more green bar, we're going to be out. Oh, went to red, good. Let's see, we're still in. Oh, we're out. We're out right there. So we're out at 91. We got in at 97. Okay, picked up 6 points. $20 a point. It's $120. Nothing wrong with that, right? Unfortunately, nobody can pick the very top or the very bottom. I wish we could, but that's impossible. Nobody could do that. That'd be ridiculous. No trade zone here, obviously. Now, you got to have the 3 indicators agree. Just look for that. That makes it easy, I think. There it is. Red, green, blue bar, blue dot, blue X. Now we're going to flip it long. Stop loss a tick below the bottom of that blue bar. Not stopped out. Ooh, I like that. Up, 3 green bars, out. That was a good one there. That was 18 points. Nice. That's a sweet spot right here. Now we get into like it's past 30 minutes, but I'm going to keep it simple right now. I'm going to make it worst case scenario and say we got in there, even though it was a little past. You don't want to be getting in the sweet spots if it's past 30 minutes. Why? Because 30 minutes, a 1 minute chart, going in the same direction for 30 minutes, they get a little tired. That's kind of pushing it. However, let's go with it because I like showing these losing trades. 3 point loss. Actually, there's your third green bar in a row. 1 point loss. See how the price touched the blue dot, bounced off of it, and now we're looking for a blue bar. Bingo, blue bar. We're in. Lost a point. There's your third green bar. Do you let the third green bar close to exit? Yes. Let the third green bar to close. Sometimes it shoots back to blue again, and you go, ooh, that like here. This bar here could have been green, especially when it was down here, and then by time it closed, it went to blue. Stayed in it, and that one worked out good. Kenny says, is there any reason why you take out the Bollinger? No, I just take it out. You don't have. You can put it back in. That's perfectly fine. The bands are really more for multiple lot trading. Now when we're getting in on every triple confirmation trade, blue bar, blue dot, blue X, red bar, red dot, red X, every one, regardless of where the bands are, I just take the bands off. I like less clutter on the chart. The simpler, the better. However, if you're trading multiple contracts, as many of our clients actually do, Yeah, put the bands back on and just take some profit when the prices hit the bands. Take something off the chart. Otherwise, it's just not needed. There's another no trades up. There's a trade right there. There's the blue bar, blue dot, blue X. Stop loss is really close on this one. It's 2 points away on the bottom of the blue bar. Stopped out. Lost 2 points. But by this time, geez, we're up a bundle. It's pretty much. Oh no, actually, it's not the end of the day. It's like 3:30 Eastern, so we'd still be up. There's a sweet spot. Comes back down, hits the blue dot, goes to blue. We're going to be in right there. Actually, we're stopped out on the very next bar. Oh no, wait a second. We're going to put our stop loss on the previous lower small blue dot because this is a sweet spot. So we're still in it, out. Third green bar. Picked up 3 or 4 points there. So, and now it's the end of the day. It's pretty. Actually, we had a winning trade at the end of the day, but I'm not going to even count that because it's like 4 o'clock New York close. Pretty cool stuff. I just want to go over that, pretty closely as far as exactly, what to look for on your chart. It's been a great week yesterday and today so far. It's been a good year overall, and of course last year was terrific. But they're definitely losing trades and definitely losing days. I don't want to mislead anybody. I mean, that's for sure. I guarantee it. And some days you get, 3 or 4 losses in a row. It's like, you want to go nuts. But you got to stick with it because it's rare you get 4 or 5 losses in a row. And usually what happens, that's when the big one comes. You don't know that beforehand. Boy, I wish we did. We'd never lose. So I love when everybody wins. Nobody likes that better than me, believe me. But sometimes it tests your patience and your discipline. I totally understand that, believe me. I know that feeling. So stick with it. Hang in there. It's good stuff. I think you're going to like what you see here. Anything I can do for you, I'm here every day, Monday to Friday. Feel free to ask. I'll gladly help you every way that I can. I hope I was helpful today. Thanks for being here, everyone. Have a good night.